All right, welcome guys. Welcome guys. So today we'll be using the same similar strategy we make use of so that you guys can definitely understand. Like this is 1 hour time frame, like I said, this 1 hour time frame. Now, if you take a look at this market, this is Thursday. This market, this was Thursday. Like I said before, this was a Thursday, and please pay close attention. Believe me guys, this strategy is really gonna pay you guys a lot. Like it's really gonna pay you guys a lot. And I really don't want to talk much, but just go ahead and make your findings. Go ahead and do your analysis, your own personal analysis, because whatever you make is gonna be your money. So now, you see, this is where the market was. This was on Thursday, 27 November. You can see it down here. It is 27 November. You can see the date here. 27 November 2025. Now, the market sells down to Friday, 28 November. Now, if you take a look at this, let me mark it out. This and this look like this is liquidity. This was liquidity. And this point too is liquidity. Now, if you take a look at this, this market has swept out this liquidity here. Now, if you look at it, there is a liquidity sweep in this point. There's a liquidity sweep in this point. So now, like I said before, once there is liquidity sweep, the next move we are looking for a reversal. Now the market was selling and it breaks a liquidity zone here. Now what we are expecting is a reversal. Now we'll take this time to 1 minute time frame. All right guys, so this is the point. This is it. This is where the real games comes in. Now, if you take a look at this, you see, this is where the market swept down. This was the end part of the market. I think in my next class, I have a little tricks I'm gonna show you guys so that you people will definitely know exactly when this type of strategy, this type of tricks comes in. Now let me just circle this so that I'll get exactly what I'm looking for. All right, so this is where we'll be playing around. We're playing around this place. So we just something like that. So I think I need this one then. This to be very nice. All right, so I'll zoom it again in so we get a better picture of what I'm looking for. All right, if you take a look at this candle, when there is going to be a reversal, this is exactly what occurs. This is exactly what happened. The sellers will sell down this market, and then there is going to be an order block movement, or you can call it internal market shifts. Now, this is what is really going to happen. Now, you will see a fair value gap, a candle, a bullish candle that swept up with a fair value gap. Please just take note of what I'm giving you. With a fair value gap, like I said. Now you see a big bullish candle that will sweep up with a fair value gap. So whenever you see something like this, once you see something like this, this is not really a confirmation that you should enter the market. Now, when there is a fair value gap, what makes this a fair value gap? There's a candle here and there's a candle here. This makes this a fair value gap. Now, don't forget what I said before, that whenever a fair value gap is being created, please don't take notes. We have the key. This candle should be able to extend across the key before reversing. Please take notes. Like I said, I'll keep teaching this over and over again till you get it. I'll keep teaching this over and over again till you get what I said. Now, this bullish, there is a bullish market from here down here. Yeah. Let me say down to this peak here. Yeah, that's where it ends, down to this peak here. Let me lighten it. Think I get. Okay. So that you guys can see it. Now, down to this peak here. Now, this peak is higher than, let me mark it out. Now, if you take a look at this peak, this peak is above the key, this key candle. I don't know if you watched my previous video when I was teaching about this. Now, when there is a bullish movement, the bullish movement should move to above this key candle. The next bullish movement you are seeing, like this is the key candle. Like if you take this thing like a step, this is the next bullish steps you see here. So this candle crosses above this head. Then once this crosses above this head, this make this fair value gap valid. Now, let me go back and show you something. Now, if you take a look at this, one here. You see, when the market comes down, when there's a bearish market, this make it the step. That is the step, and this is the step, and this make this the key. That's the key to this step. So once the market rallies up, the bullish market rallies up, and if you take a look at this candle, the bullish market could not break this. Sorry. The bullish market could not break this key. This is the key. The bullish market could not break this key. So what next? It rallies down again. But I wish this bullish market breaks this key. That would have been a valid fair value gap for reversal. Like what happens here, like I said, this makes it the key because this is where it steps down. This looks like the step where it steps down. Now this makes the key. So when it rallies up, it crosses this key. This is what we call internal market structure shifts. This is what we call in the Forex market as internal market structure shifts. Now, internally, there is a break of structure. Internally, there is a break of structure in this point. So this is exactly what I mean. You see there. So now when this make it valid, what do you need to do next? You wait for reversal for it to retest this fair value gap. So once this retests this fair value gap, what do you need next? You need the next candle reversal. So like this, it rallies up and then crosses, break this structure, making a break of structure. Then what next? Start coming down again. And this what? Close down this fair value gap. The moment it closes down this fair value gap, some traders can enter the market while some traders can wait for another bullish move. So now what do? They place their stop loss, like I said before. They place, because this candle, they place their stop loss, because this is where the stop loss will be. Sorry. So this is where the stop loss will be, below here. And then their take profit, don't forget, I said the take profit should be the next fair value gap, the next previous fair value gap. Don't forget. Now, does it? This is the next previous fair value gap. Then your take profit can be below this next candle. So that's it. Should be below this, below the fair value gap, the last part here you can see. So this way your stop loss should be, and then your take profit should be in the fair value gap there, your previous first fair value gap. So you see there. So you can take a look at it where the market rallies up here and then does what? Take out your TP and then reverse. I can give to you guys. If you are comfortable with it, you can learn my strategy, and I can tell you guys this is a whole lot of consistency. This is what you'll be getting with this out of 10 trade. Definitely you definitely will win nothing less than 9 out of the 10. So that's just it, but just pay good attention, follow it up step by step, because this is what I'll be doing till you get it. Just thank you for watching. See you in my next video.